Hi, this is Rajendran from Market Calls, and today we are going to have a quick session on Nifty trend analysis and market profile analysis. So today's time is 5:12 a.m. and the date is 12th June 2017. Let's start the day with the monthly analysis, monthly charts. So this monthly Nifty future continuous contracts, where you can see that the trend is clearly up in a couple of last couple of months, which is one time framing higher. That is, it's continuously making higher highs and higher lows for the last 1, 2, 3, 4, 5, 6, 7 trading session, and the last previous month low 9281, which I taken it as a critical reference from the trading standpoint. So 9281 is a critical reference, and the monthly time frame is trending higher. There is no weakness which occurred so far from the monthly time frame. It's continuously hitting higher highs and higher lows without any weakness, right? So clearly the long time frame trend is up. And when it comes to the weekly charts also showing a similar picture. Not much weakness is seen so far, except some couple of rotations. A couple of rotations came during the November 2016 to January zone, and followed by that another couple of rotations seen around the March to April month, right? So price was balancing in a very tighter range, and followed by that the breakout coming in is so far sustainable, and every week on week it is continuously hitting 50 higher highs, I mean the all-time highs. The trend on the weekly time frame is so far up. So the monthly is up, weekly is up, weekly not much rotations. But then when looking into the daily time frame, right, so the daily time frame shows lot of rotations, right? So it shows rotations followed by a momentum breakout, again rotation followed by a momentum breakout, done some activity, lot of rotations, I mean highly compressed tight range, and then a momentum breakout, again a tight range, momentum breakout. So this is keep on happening for a long period. So almost it started from 2017, that the trend started somewhere during the start of 2017, and so far the momentum players are coming and buying every breaks, right? So the recent last week trading section, it's again just nothing but we got an balance within a very tightly packed range. It's the last week is range is roughly around 85 points, right? And the volatility in the market is very low, and sorry, the volatility in the market is very low, and that makes the range in the markets very tighter. So it's such a frustrated trend. Not much opportunity for the day time frame perspective, because most of the days we are seeing an very tight range. So either the people who are going long or short are not getting any benefit out of it, and the people who are shorting this market also not getting any benefit out of it. So only who is making money is mostly the positional player who are in longs, and those who have patience to hold on to the position is the only one who is most likely to be making money consistently in this markets. Otherwise it's quite a challenging market for a very short term players, especially the intraday players, or the players who want to hold it for a very short term period. It's going to be a very challenging market here. We are in a very challenging environment, and let's look into the profile and understand what kind of setup we do have, and what is the trading behavior which we are able to get from the charts, right? So one interesting thing I was observing in the last week session, which is nothing but the mechanical selling. I would say that the mechanical selling is clearly coming around 9 9,700 reference. So the selling came around 9,700 on last Monday, last week Monday, and again the selling mechanically coming bit higher, 9,705, which is nothing but an all-time, very close to the all-time high. And again selling was clearly visible around at 9,700 levels. Again on Thursday the selling was coming around 9,705 levels, and last Friday session it was a late spike. And the spike started from 9650. So 9650 is a critical spike based reference level. So this, I would like to call this as a spike. Maybe I'll try to put out the references. So couple of reference level we would like to carry forward for Monday trading session. The spike base, right? The spike base, I would like to put it out as a spike base. So spike rules apply on Monday trading session. Let's say like this is nothing but spike base. So spike base will be carry forwarded, and a couple of mechanical references here. So my mechanical references over here, over here, over here. So lot of mechanical references coming in that reference. So what it says is that a lot of stops, lot many players are selling this market around from this. I mean any selling which was coming around above 9,700 was clearly and from the shorter time frame players, because it's very mechanically sort of and moreover the top reference here, it's kind of a weaker reference. The top reference at 9,700, the mechanical reference, and the all-time high which printed on last Thursday session, it's supposed to be a weaker reference, and because it's weaker reference because it's just 2 ticks above the previous high which came on the Tuesday high. Related to the Tuesday high, the Friday, the Thursday high is kind of a 2 ticks above that reference. So it's still an questionable high over here, and all these mechanical selling which was coming in these references, the mechanical selling which came on last Monday, Tuesday session, Wednesday, Thursday. So all these are showing an very close mechanical selling references. So one possible way we can look out is probably the players who are coming and shorting very mechanically, probably their stop loss would have been above 9,700. So one can see an firecracker effect coming in the markets when price is able to open within the range. So let's say the price opens over here and immediately trying to cross the previous day's high. It is a kind of a sign that probably the market is trying to breach all their stops. It might be looking for new sellers in the markets, right? So this is one information I would like to see, because I'm anticipating this because of a lot of mechanical selling happening over there. So let me mark this references as mechanical selling zone. So mechanical selling zone, I would like to mark it. So most likely an price open above the spike base, it is an positive sentiment. It will convert sentiment to positive, because last Friday what happened is the value area formed lower. Price was trading below the 4-day low. So price was trading below the 4-day low. It looked below the 4-day low and it was doing some activity. But then later in the second half of the session, it tries to look above the 4-day low, and finally it tries to manage above the 4-day low, and in fact it also ended with a spike. When the spike comes, the price was able to migrate higher. So by that time the price was migrating higher. But then the point of control stays lower. So what it says is that the inventory is getting long to too long, which is kind of an riskier for the longs in the very short term. But then price will always try to price that there is a vulnerability over there on the top as well, because of the questionable high as well. The questionable highs over here, which says that a lot of weaker stops probably could be at the top, and any acceptance above this, if the price is able to sustain above this spike base, and then the price is able to open above the spike base, then when the price is able to open above the spike base and it is able to maintain, we can anticipate some stop hunting coming in the first at the market open, or probably last Friday we had an negative global market reactions, especially on the tech sector. The stocks like Apple, Facebook, Google, and Netflix, Microsoft, lot many technology stocks gone for a toss, and so if that reactions are going to continue on Monday opening, probably we may see some open around. The spike base, or even the opening may come below the previous pullback low. The previous pullback low was over here. The previous pullback low was somewhere over. The previous pullback low was around 9628 reference, and it's going to be an assessment reference to understand whether the sentiment is going to maintain positive or probably negative. Any acceptance below the spike base, the sentiment is going to stay negative, or probably a gap down opening below the rally high. So sorry, the pullback low reference. The pullback low reference will going to maintain the sentiment negative in the markets. The pullback low on last Friday session, it's going to be a critical assessment tool. So any price which is going to open down below the pullback low, which is going to be a negative sentiment, probably it could bring more negativity in the markets, and acceptance below the pullback low will bring more negativity in the markets, or probably and price opening above the spike base. The spike in that case, what we want to have to monitor is and the price acceptance above the spike base. Let's say the price opens over here and try to inch up towards the day's high. What one can expect is an the firecracker effect towards all the weaker short sellers who came on who came mechanically around 9,700 and 9,705 reference levels. Right, so the last possibility, which is the least possible setup, which I would like to look out for, is let's say the price opens within the range, but then it is able to accept above the spike base. And then in that case we may try to push down one more lower, but then price coming back, and then it tries to create some value area in this range. So that will be a kind of a more boring trading session, but that will create the value area overlapping to the relative to the previous session. Not much activity, very tight compressed markets can be seen, especially when the price is opening below the spike base. It tries to pulls down, but then no fresh selling activity is seen below the previous day's low, so which is nothing but the 69619 reference, which I taken from the daily chart. So if any no fresh selling seen below the previous Friday's low and price is pulling back, it says that the sellers are not confident in selling this particular markets, and probably this could lead to an rotational environment and probably an value area overlapping. This is least expected from the markets, so my first preference goes to the stop hunting, especially if the price is able to accept open above the spike base and trying to move towards the day high. Probably I'll be expecting some some sort of and stop hunting at the around the opening itself. Right. The second scenario is an gap down. Probably this could be a continuation of the last Friday's tech sell-off scenario. If that momentum is going to reflect in Indian markets, probably a gap down below the pullback reference could bring some more meaningful downside. And this says that the sentiment is going to get weaker. One of the reason is that last Friday we had an value area formation lower, and probably more an acceptance below that pullback low could bring more sell off on the downside. Right. And the least scenario which we discussed, which is most least thing which we can anticipate from the market, which is an price opens within Friday's range around the center, pulls down below the day's low, no fresh selling activity below the no active selling below the day's Friday's low, price gets back into the reference. It's a sign of a low confidence selling, and this could lead to more rotations, and probably and more compressed rotations is what one can anticipate from that scenarios. Right. So thank you again. We'll meet you again with more interesting setups, and we'll discuss more market profile related scenarios in the future. Thank you.